Chair Powell has spoken, and the markets are shaking it off. They do not believe that the Fed has the resolve to keep hiking rates and to keep it there longer and higher for longer. So that's what's going on today. Let's jump in and take a look at it. The Dow was up a couple hundred points, down a couple hundred points. So it's been all over the map today. Flat right now, a few minutes out of the close. S&P losing a little bit of steam going into the close, but still up about 1%. NASDAQ up almost 2% as the beaten up tech stocks are making a run for the door right now, or run for the hills right now before they make a run for the door. We will see what Facebook looks like. It reports after the bell, and if Facebook has a poor report, poor earnings, poor guidance, that could affect NASDAQ quite a bit because Facebook is up quite a bit today. So right now, it's all about the Fed and all about what Powell said and what the market thinks Powell said. He says he sees no signs that the Fed is open to 2023 rate cuts. He's also saying that they're very concerned about the labor market still. Let's go into a little bit of a recap here. The focus is the labor market, still a very tight labor market, as we've been talking about. They do not expect to cut rates in 2023. Although he did say if we do see inflation coming down much more quickly, that will play into our policy setting, of course. So it was a more dovish tone in the meeting, but he still basically said our work is not done. We still have work to do. We're going to continue to raise rates. We're not talking about when we're going to stop. We're not talking about our target for the Fed funds rate. The meeting was interpreted as slightly dovish by the markets. He expects to see growth at a subdued pace. He's saying it's certainly possible that the Fed fund rate stays below 5%. That was a question asked by CNBC's Steve Leisman, and he said it was certainly possible. But earlier he said that their target for the Fed's fund rate could be higher. So, he's kind of talking out of both sides of his mouth there. He said without a really significant downturn or a really significant increase in unemployment. So Powell said that he still thinks the Fed can get inflation back down to 2% without a really significant downturn or a really significant increase in unemployment. He thinks the disinflationary process has begun. We can now say that I think for the first time, the disinflationary process has started. We can see that, and we see it really in goods prices so far. He said that it's premature to declare victory. He said that multiple times. He said more rate hikes ahead to bring inflation down multiple times. He said the Fed is giving itself some leeway for future policy moves, either direction. And he said they have not hit sufficiently restrictive policy stance. He said just somewhat restrictive. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. He said it's our judgment that we're not yet at sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes, and the economy is still in the early stage of easing inflation. And he said over and over that inflation is the Fed's battle against inflation is not over. And the biggest thing that he said was they do not want to make a mistake of not staying with it long enough and inflation comes roaring back. He said that if they over tighten, they have tools to adjust for that, but they do not want to make the mistake of inflation coming back, which obviously it's trying to do with gas and a few other things. The data that came out and what he was speaking to was last month's information. So this month is a different picture. January's information is going to be a much different picture, which we're going to get that information here real soon because we're already in February when the Fed's meeting. So it'll be very interesting to see what the markets continue to do. Let's take a look right here. Dow just kind of ranging right now, down a little bit, up a little bit, but kind of finishing out flat. NASDAQ is still up quite a bit. Facebook could take the wind out of the sails here with a poor report. But the interesting thing, here's the S&P. And we'll get to, is this a bull market again? Is it safe to say the bottom is in and bull market is on? Let's talk about that in a second. The VIX is at 17, right below the 18 level, a dangerously low level for the VIX. We could see it drop back down to 14 if the markets want to continue. The Dixie is taking this last level here of support and testing it. So we will see what happens with the dollar. And the 10-year dropping back down to the bottom of the recent bounce here, rejected off the trend there. So interesting times for the markets right now. Bitcoin kind of hanging out, same thing, about a 2-3% jump on Bitcoin today, kind of still testing this range here. The real question is this going to continue to be a consolidation range in that range of 22 to 23, or will it drop back down into that 18 to 20,000 range? Or will it drop all the way back down and retest these lows? So a lot of people are saying the bottom's in. A lot of people saying that now that this was a basing structure and Bitcoin's off to the races again. So I don't know that I agree with that. Without a little bit more work put in, this just hasn't been a long enough time right now in this current environment. But this very well could be a base. It could continue to range in here from that 16, 17,000 to 20,000 range. It could potentially go back and drop, and test this low level. I don't see it breaking this level. So I think that this base that was set here around 15,000 is a good low end right now, unless something significant happens. We get an escalation somewhere, Ukraine or somewhere else in the world. There's a lot of tensions out there with Iran, China, all kinds of stuff going on. So if we get a geopolitical event, that obviously would create a situation. If we get a market event, that would create a situation. If the markets just all of a sudden decide to sell off and tank, let's see how they're closing right now. Still hanging on to the gains in the NASDAQ, S&P, the Dow's, flat again on the day. So that's good news for today. And we looked at what happened last January or the last Fed meeting after a 25 basis point rate hike. Everything kind of dropped off a little bit there. So we'll see if the market can kind of hang on to this. As we've said a lot of times and multiple times, that there is a lot of liquidity out there that needs to go to work. There's a lot of capital that needs to go to work, a lot of money on the sideline. So investors are looking for the opportunity to enter when it's all clear. So they're afraid that this is just a trap that's potentially being set for other investors trying to exit the market. So they want to make sure that it's all clear. The Fed is not done. They're going to keep going, but the economy is still pretty strong and resilient. We still have a lot of earnings coming out to indicate the strength of the economy. The jobs market is still extremely tight. So right now, this could be a basing area, a range area right now for all markets, unless something really happens. It seems like investors are getting more comfortable that we are closer to the end than we are from where we began, obviously, especially on rate hikes. With the Fed slowing, potentially no more rate hikes. So there's a pause after the next meeting. If they hike rates the next meeting to get to that 5%, there is a potential that they could pause if inflation is continuing to come down from that point on. And if that happens, the markets will definitely rage from that point on and start working their way back to the highs, which would be interesting. So right now, it's not bull market conditions yet. There's still a little bit more work to be done. We need to see what the inflation looks like for January, what earnings look like, and what the Fed's next response to that's going to be at their next meeting before you can really start to say that the bottom is in and it's bull market back on. And there's a difference between the bottom being in and a bull market. So the bottom can be set, you can base, you can range, but that doesn't necessarily mean a bull market. So a little bit work left to be done. Inflation is still too high. Some costs are still rising. There is a chance, a probabilistic chance of a double peak inflation. There's a probabilistic chance of escalation from a geopolitical standpoint around the world. So there's still some headwinds out there. There's still some things to deal with. So it's not full on risk on right now. The Fed has not said it's time to go. So we got a little bit more to do. And, maybe we'll get to that point sometime this year. So if you're new to the channel, these are the things I talk about. I talk about entrepreneurship. I talk about and teach entrepreneurship, real estate investing, real estate development, buying businesses, starting businesses, growing and scaling, raising capital, mindset, leadership. These are all of the things that I've done over the 26 years of my entrepreneurial career and 35 years of my career in general, working from the military after high school on, and even as a kid, when I was an entrepreneur as a little kid. So that's what this channel is all about. It's all about entrepreneurship, which is freedom for you, making your own choices, deciding how much money you want to make, deciding how you want to use your money, how you want to use your time. That's what I am passionate about. That's why I teach what I teach and do what I do, because my entrepreneurial journey has put me in a position to where I can do whatever I want, whenever I want, from wherever I want, and to support whatever I'm passionate about. It's all about impact. It's all about the butterfly effect. So that's what this channel is all about. I hope you find it useful and helpful, and I will see you on the next video.